Hey, what's up, guys? If you want to learn how to identify the trend of a market, then this video is for you. And if you're actually interested in this particular video, that is gonna tell me that you are basically a newbie in the trading market, because this is basically like a a fundamental level, right? A foundation level of all trading, identifying the trends of a market. So I'm just basically gonna make this video as if I'm talking to beginners, right? So if you are watching this video, make sure to watch this video with an open mind and be able to understand every single thing about the trends of a market. Now, mind you, market trends does not always determine the direction of a market. Sometimes we have market reversals as well. So there are some other factors that also play into being a profitable trader alongside with the trend of the market. So let's go ahead and get the whole thing started, guys. Don't forget to go ahead and subscribe to the channel to be getting more updates on different ways to make money using your trading strategies or skills, right? So let's go ahead and get it going. So what is market trend? A trend is simply when something is going to a particular direction. So let's say something is trending up, right? That means this thing is going up in value, or is going up in fame, or is going up in something. It's just going to a particular direction. It's not ranging. And when you say something is trending down, that means this thing is losing its fame, or it's losing money, or it's losing its worth, something like that. Okay, that's the same thing that it has to do with trading, whether forex trading or crypto trading. So whenever you hear a market trend, it means something is going to one direction. It's not ranging. For example, over here we'll have something ranging. It's not ranging. Okay, so let's quickly go ahead and see exactly a few examples over here that we can use to be able to identify some trends. So when it comes to trading, the trends are mostly identified using the highs and the lows. So let me give you guys an example. Let's say over here, right? There is a very easy way to spot the highs and the lows of market over here, even over here as well. So you can take up your something called a trend line. Just go to your line tools and go over here, see trend line, pick it out, go to the last one over here, put it under it, and go to the next point that the market has returned to but reversed, right? So if you ask me, I would say this place, okay? But then what do? You don't just leave it over here, you drag it as far as you possibly can. So what does this tell you? This simply tells you that this market is currently going an uptrend, because you can see over here it went up, came down, and then it's going up again. So this is a low, this is a higher low, this is a high, and this is a higher high. So the market has officially formed an uptrend. So now what do you start doing? At this particular juncture, anything sell is off your mind. You're no longer interested in sales, because remember, high, higher high, low, higher low. So anything sell or short is already off your mind. So what you start doing right now is start, maybe looking for candle patterns to enter your buy position or stuff like that. Okay. So let's say, for example, we see this particular candle pattern. Let me go ahead and pick out a long position too, right? We see this bullish engulfing candle pattern. You go ahead and put it over there, and maybe put your trades to 2:1 risk to reward ratio. Put your stop loss. So let's say we'll go ahead and put our stop loss. Let's bring the stop loss somewhere up here and put this over here. So let me delete this so it won't confuse you. So this is actually based on another analysis I was doing prior to starting this video. Okay. So let's just say, or let's just put it over here. Let's just put it over here, the stop loss, and leave this one at 2:1, or you can just put it 2.5:1, depending on your trading strategy. Okay, so let's drag it over here, and you can see clearly that this actually did go to profit. Okay, because it did come over here and it did some things and still went to profit as well, right? Now at the same time, you covering the uptrend, you've also been able to identify what your downtrend as well, because then we have a high over here. The market did come down, didn't do very much, giving you what a lower high, but at the same time it's already had broken through this trend line you once drew. So that's already been recorded in your mind, and then already it gives you a lower high. Now with this particular 3 activities, you already have started thinking, okay, it's time to go short. Anything giving you long position signal, you ignore it. For example, we have a bullish candle right here with a bullish hammerhead candle over here, and also an engulfing uh, candle pattern over here. But you ignored this too, and you didn't go long, right? Because just imagine, had you gone long in this situation, right? Just because you saw this and you go ahead and put in long over here, and then let's say you put your stop loss just below this particular level right here, and you put your take profit at 2:1 or 2.5:1, right? Now doing this over here, you can see clearly that you will be stopped out without mercy. Like you'll be stopped out in minutes. Your trade is basically gonna run only in the red. So just simply identifying the trend, you already are able to avoid trades like this. Now, places like this, the thing that what you start looking for is sell trades or sell signals. Now, this is another thing that can happen to you. Let me show you guys. Okay, let's go ahead and put out our short trading over here. Okay, so we've already identified that we're basically gonna be going for a downtrend over here, and then we have this bearish engulfing candle over here, and we enter the trade, put our stop loss, let's say just above here, and then our take profit at 2:1 or 2.5:1 risk to reward ratio, and then we'll go ahead and do this. Now look at what happened over here. It didn't mean that you are wrong. You were not wrong actually, but then the market did change briefly before it continued moving to your direction, because remember, this is a low and this is a lower low, right? And then the market retraced. So the market basically went and sought for stop losses, right? This is something that happens occasionally when it comes in trading. There are markets that actually intentionally go looking for stop losses, and it wiped them out because it already knew that traders are gonna start going short position after it has already broken the trend line. So it went on to look for stop losses. If you look at this, you can see that this is kind of a strong bullish power pushing this market right here. So let's delete this. Right, so this is a very strong bullish power pushing this market over here, and until it got to a place like this. Now normally the market is probably going to get to somewhere like this, but I guess it already had its fill, right? It got to a place like this, and then it's boom, reverses completely, giving you another strong lower low, and also what, confirming the lower high just by this move again. It confirmed another lower high and giving you another lower low just by that move. Now what happened over here? This is where you're supposed to take back your money, because remember you lost money over here. Now what you have to do in a situation like this is simply come over here, pick out your horizontal line. You come to this section over here, and draw your line. Now let me tell you what you have in mind, right? What you have in mind for drawing this line are two different things. So the very first thing you have in mind is if this market comes back to this place and reacts going up, what does that mean? That means you are going buy and putting your stop loss just below it. But if it comes and breaks through just like it did, you can see this clean breakthrough. It breaks through and it comes back to react on this same line again. That means you are hoping for a sell. And while you draw this over here, it's also wise to draw another one over here. Now, as you draw these two things over here, what you have in mind over here, what you have in mind you would do when the market comes over here is the same thing you have in mind you would do when the market comes over here, right? Because then if the market comes over here, this is already quickly looking like a ranging market. You can see it over here. It's already quickly looking like a ranging market. So it makes everything simple for you and easy for you, right? Because now, let's say the market comes back and you go ahead and go short again, right? So the market comes over here, reacts over here, gives you a bearish hammerhead. Nope, it gives you an engulfing candle. You can actually take a trade in a bearish hammerhead. It doesn't matter. So let's just go ahead and put that over here and put our stop loss not too far. Now, in situations like this, you don't put your stop loss too far actually, because if it does break it, the chances of going high is very, very high. Okay. Now over here, you can put 2:1, right? And you can just go ahead and drag it out. Okay. So you can see at the end of the day, this also went to profit. So the money you lost that place, you have gained it back 2 times and more. Now, just imagine how powerful this particular trade is. Now, this particular one went super, super powerful, but I know that you're not gonna know how strong a trend is gonna be at at a point in time, right? So you can see this is up to 12.89 risk to reward ratio. So you're basically not gonna know how strong a trend is gonna be, but regardless, this is something you should know. Okay. So you can see how clearly or how easy it is for us to identify these points of actions and this point of market reactions. Okay. And as well, just like we did over here, seeing this over here, you're also supposed to do the same thing over here. Now, what you know, or this is what you're doing all this, is because you are trying to identify points of market interest where there is point of reactions, probable reactions going to take places in the market, right? So right now you have been able to identify that place. You took your short position, right? Let's redo that again to make sure we are in the right place. Okay, so let's do this again. We do this over here, put our stop loss just below this line, and 2.5 is to 1 risk to reward ratio. So over here, we would have closed out this market long ago at this juncture, right? And then the market comes over here, moves back, also reacts as well up to this point. You can as well go short again if you want to and put your stop loss just above it, or you can just leave the market if you want to. But personally, me, I would have taken the short position. So probably close out that trade over here, and here we have a potential buy. Okay. Now at this point, I probably would have lost money because I would have decided to go ahead and join this market. Even clearly with my own personal understanding, I know that this shouldn't be so because we are clearly in a downtrend. But due to the fact that I'm already seeing a pattern trying to form as a ranging market, I might go ahead and take an up position, which would have closed me out just below here because I won't take too much of a stop loss, right? And then once this happens over here, what happens already? This becomes a point of resistance. So wait for the market to go down, and we expect it to come up. And you can see over here, this one didn't exactly come up, but it did do the same thing. Okay. So this place as well, you can do market splitting, right? Because we have a market reaction over here. You put it over here, and while you're expecting it to come here, you take like small amount, enter trade over here. You wait for the next one to come over here for it to enter the main trade, right? So that just it. Okay. So this is just simply how to read the trend of the market. If you have any question, you can ask in the comment section. Don't forget to subscribe to the channel, and I'll see you in the next one.